Hello friends, welcome to Pro Trading Zone. So today is the day when we take all the chart patterns that happened in the week, that is from Friday till Thursday, that is one weekly expiry, and we put in all our efforts to explain how zone trading worked that day and what were the opportunity for a non-directional trader and what were the chart patterns that made sense to us and why we took the trade. This is one of the most powerful video where you will see that once you get a hint of an understanding that how we take a trade in non-directional fashion and make it a use as a directional trade when it goes out of our zone. Just to give you an example, what is zone trading? In zone trading, we take two important pivot points in the chart and we consider that market would be inside it. If market breaches it, we are going to take a directional trade. That is, in non-directional trade we take a call short position and put short position, but once it is breaching the important pivot point, we are going directional. That is, we remove the call short position, let put short position make money for us. Similarly, when it goes down, we remove our put short position and let call short position make money for us, and this system has been working wonders for us. So let's look at what trade we were taking this week and how much money we were making and how good we were doing with our trades by following our rules of zone trading. If you want to learn about zone trading as a strategy and as a rules that we follow, you should search for zone trading by Pro Trading Zone. Search this video. You will be having a wonderful time in the market with less of worries deciding where the market is going in the real time. That is, when the market is active, you don't have to worry where market is going. The rules are gonna give you the best understanding what to do in what direction you have to take trade. So search for zone trading by Pro Trading Zone. Search this video, watch this video. So let's dive without wasting any time and understand what trade we took on the 18th of the April and how much money we made. So we took a trade approximately over here. I saw that market is going up and down, but I had a belief that market will be now stable after approximately 10:45. I had a feeling that market would be stable. I took a trade according to the zone trading that I would be taking a non-directional trade, that is short straddle and short strangle. I took a short straddle and strangle over here and let this point and this point as my pivot points. That is, if market stays between this, we are not gonna take any trade. It is as simple as this. You do not take any trade or you do not do any other adjustment until and unless these points are bridged properly. So we took a trade over here and exited over approximately here, and we made approximately, here's a short that shows how much money we made. It is approximately 240 right now and market is around 36,840, and it is approximately the level where we have taken our short straddle and strangle and we are looking at a good profit. In short strangle at 36,100 put, we are looking 40,750 profit, and 37,400 call, we are looking at a profit of 64,750. In total, we are looking at a profit of 1,07,500, that is 0.64%. In short straddle, we are looking at a profit of call and put. In call, we are looking at a profit of 1,21,000, and in put, we are looking at a profit of 12,500. In total, we are looking at a profit of 1,30,500, that is 0.71%. We are exiting our trade and booking profit. Bridge this channel. Once it bridged this channel, it was a clear sign that you should have taken a directional trade if you want to take a directional trade. We were sitting on our position that we took over here. We didn't do anything else. We still made good money out of it. But for a directional trader, you could have taken a directional view and you could have exited over here once it took a resistance on another pivot point of ours, that was 36,871. Nicely it took a support over there, resistance over there, and started coming down. This was not a trade for you. It is okay, you would have taken a trade if you would have entered over here and exited over here. It was a good trade for you. But if you would have taken a fresh trade, you would have seen there is a resistance with a big candle, you could have gone short over. Second trade that you could have taken for the day, this was something that was drawn dynamically. This is a dynamic pivot points for the next day, not for today, for the next day. And you can see the market just went ballistically upward till the end of the day. But this is not something I would recommend to take in zone trading rules. The only trade was from when it took a support over here, crossed your important channel levels, and then you got a good handsome return over up till here. So it gave you approximately 160 points of move without worries while thinking that what you have to do. I would prefer that you take a short position over here. That is, you would have taken a put short position over here and made good money with the theta decay over the way, or going up you would have earned your delta movement. I would recommend a theta decay movement and a delta movement by taking a put short position over here. But you could have bought your call and made good money, still made good money. It took not more than 1 hour to go for 160 points. Proper understanding where to exit and where not to exit. Stop loss was this part. This was the important pivot point which acted as a stop loss. The stop loss was not that big, you would have made good money out of it. This was one of the way you would have made money properly. But one of the recommendations that I give always are three important trading zones, three important chart patterns that I consider. One is U pattern, second is W, and third is M pattern. So you could call this as a cup handle pattern, but this kind of motion gives you excellent amount of profit in the directional movement. If it is forming in the day's low, if it is forming on the day's low, it goes to the day's high and even crosses it double out. In W pattern, it generally reach to the day's high, but it has an activation period. I will just explain you what is the activation period. This is the M pattern. It is opposite of W, or it is called as double top, or this is called as double bottom. This trade helps you to earn excellent amount of money, and this chart patterns gives you excellent amount of money, but it has a proper activation. Every chart pattern has an activation pattern or activation line. Just to give you an understanding, I gave a short video, or I put in live shots in the live trading session where I explain exactly how you should take a trade in the live market. I put this in the live market so you can have a quick assumption about what needs to be done, but always do your own research before taking a trade. So this is a W pattern that is forming crooked and it is giving you an upward trajectory. So once you were giving a W pattern, but even though this is a good W pattern, I would have preferred it to be in this fashion, and the activation was only when this was broken properly with a big candle. Then you could have seen a upward direction up till here, or it could have gone up till our second point over here, but it didn't properly cross this point. So this W pattern was null. This was null. We didn't consider it as a good example to take a directional trade onto it. This was nullified because this level was not properly breached. One more thing is that a W should be formed in this fashion for at least between 1 to 2 hours. Between 1 to 2 hours, it should take a W pattern to form, and then it should breach an important pivot point of ours, which clear cut determines the W pattern, and then it will go up. It is very important to take this assumption. Same for U, same for W, same for M. So we took a trade over here approximately. Here approximately we took a trade, and later we believed that market would be in a range. So we took two pivot points. One was dynamic pivot point and one was the static pivot point that we have drawn many days ago. These two pivot point gives an understanding that market would be in this zone only. This is our assumptions, and this is we believe that will give us good profit if we do not take any trade once we put in our non-directional trade, that is short straddle and short strangle. We entered approximately at 9:30, 9:45, 9:30, 9:35, and we exited approximately here. In this time frame we exited and we made a good money. Here is a short of live shot of the money that we made and the profit that we booked. So we have taken our trade over here approximately, and we are exiting our trade right now. We are booking all our profit as we are making good theta decay gains, exiting all trade and booking profit. In short straddle at 36,800 call and put short, we are making a profit of total 115,375, that is 0.7%. In short strangle, in put short and call short, we are making profit in both the positions, and in total we are making 67,625 rupees profit, that is 0.43% profit in total. We are exiting all our trades and booking profit. As you can see, we made a good hefty profit in short straddle and short strangle, but if it would have been a directional understanding for us, or the chart patterns would have dictated what we need to consider as a non-directional trader and as well as directional trader, was this W pattern. Again, a W pattern. Why it is important, you will understand right now, because the W was properly formed, but the activation wasn't happening over here. You could see there was no properly breaching of the pivot point and going up. Here we could have considered this line also as an activation, and then market could have been expected going to the first pivot point or going to the upper pivot point, that is this one. This could have been the target, and it would have been a very good target for us for as a non-directional trader as well as directional trader. We would have exited if there would have been a good directional movement for even in zone trading and even in directional trade. Both would have been in a good money in that day. This was a W pattern that could have formed, but it was not formed because the breaching of the important pivot point was not done properly. The second thing, you would have considered this trend line. This trend line act as an understanding that market is going down. As market is continuously going down, I believe that if this line is followed properly, it would be a proper downward day. But since it took a little bit of point over here, you can say that this is double bottom forming over here and then going up. But this is not something you should consider, because when double bottom forms, it goes exponentially up. So this was a crooked double bottom, but market again went on the upper direction. So once market started going up, the only time you could have taken a trade was when this was properly bearish. This pivot point was properly bearish. Directional trading with zone trading rule. This is the concept that I am teaching right now. So once you see that this important pivot line was breached, it went up, it came down, and again this is a retracement trade. This is not you retracement trade. You would have taken a long position over here, but I would recommend a put short position so that you could eat the theta decay as well as the directional movement also would be a good. Once we wouldn't have exited over here as it did not breach or took a reversal from here. We would have hold our position, and when it came back over here, we could have exited the position as we would have good theta decay but no delta movement with us. That's why I was recommending put short position. And again, when this hammer candle was formed, this is very important. Hammer candle was formed with a arm. A hammer candle is of no use if there is not a good green candles associated with. There has to be green candle with a hammer candle, then only it is activated. But for us as a zone trader, if it came over here, took a reversal, we could have considered this level, that is this level, as an activation point, and you would have a beautiful ride till upside over here. So you would have made good money, approximately of 340 points, proper 340 points movement would have been captured. Later, one more trade that we had, that was the fourth trade for the day, was when market took a reversal from here, it started coming down, it got activated as soon as it took a reversal trade, retracement over here. You could have entered with this pivot point as your point of understanding that market is still going down. This is only a retest that is happening, and you can see how properly it respected our pivot point. Here also there was respect to the pivot point, again there was respect for the pivot point, and later you would have only exited the market here or here. Why is it so? Because every candle that was formed was a big candle, and it was a red candle, which is showing you that market is going downwards and market is ready to go downwards. So you would have exited here or here. Once it came down, it again touched our pivot point and it was showing green shoot. You could have exited over here, or you would have exited over here because it again touched our pivot point. Look at the candle formation over here. Big red candle as well as green candle that came respected our pivot point of 36,610. This is how easy the market becomes for you when you follow zone trading rules with pivot points. If you would have considered that this would be a good trade for you, I do not recommend according to the zone trading to take a trade. There would be people who would have made money from here till here, but for us as a zone trader, we would have made from 37,111, 36,626 or 36,417. That is more than 400 points here and more than 600 points here without worries. The main thing is, without worries you would have made money because you are following zone trading and you know exactly where to exit and know exactly what to do when market reverses or market take a plunge. This is the power of zone trading. So later, this was something for the 19th April, which I recommend you to see the video also. I have posted each day's video that I give an explanation how my trade went, how I took a trade, what was my directional trading behavior, what was the non-directional trading behavior, how zone trading made us good money. Now let us look at for the 20th of the April. So on 20th April, it was a good day for us because it was the day when we found that market was following zone trading rule. Rather, zone trading behaved exactly as market wanted to behave. If you would have been a directional trader, it would have been a messy day for you. It would have just created nuisance for you or made a proper brain squeezer for you, because market didn't move on any directional on a heavy way. That is, market didn't give a directional move that was heavy. So market opened approximately 300-400 points, and the first candle was red and the second candle was green. This was the classic sign that market is going to be sideways. This is not something I would recommend you to take a trade, but this gives you an assumption that what can a market do. So you could see the market is going sideways. So approximately at 9:30, so approximately over here we took a trade and then we exited our trade. So we took our trade approximately over here, we took an early trade and we exited approximately over here as we were thinking that market could go directional. You can see the short which explains how much money we made, and we made excellent amount of money. This is a live short that we put in the live market. So you saw we made good money just because the market was on the sideways and we earned theta money. So we have taken our trade in the beginning of the day, and right now market is at around 36,470, and it's been more than 2.5 hours and we have gained enough theta decay to make a decent profit. So let's see what has happened in our trading strategies, and we are going to book profit over here and exit all trades. In short trader we are looking at a loss of 30,000 in call short, and in put short we are looking at a profit of 1,46,375. Total we are looking like 16,375 profit, that is 0.7%. Short strangle we are looking at a profit of 78,375 in put short, and in call short we are looking at a profit of 23,000. In total we are looking at a profit of 1,01,375, that is 0.65%. We are exiting all our trades and booking profit. That is, we gain theta. That is, the options lose their value and we are earning on it. Even though market would have been directional, we would have gained the delta movement. That is, market would be moving on the directional, either it would be upside or the downside. We would have still made good money because we would have used delta to make good money out of it. If you want to learn about option trading, or you want to learn about if you want to learn about Greeks of option, please search option Greeks by Pro Trading Zone. This video will give you an understanding exactly how to use a Greek according to the pattern the market is making, according to the how market is behaving. This is very important to take a trade according to the Greeks, because it will give you exponentially good amount of money and your trades would be way more smoother without worries, and you will understand exactly what needs to be done. Let's look at the perspective of a non-directional trader. For me, according to zone trading, there was no trade throughout the day until it formed triple top over here, or rather I should say that market was respecting our 36,610 level again and again, important period one again and again. And once a red candle was formed, the big red candle, that is a rejection with a big red candle, that is the activation of going short or going directionally to the downside. But for as a zone trader, we would have taken our trade approximately here somewhere, and we would have exited once market came down up till here and it was touching our pivot point from downside. So we would have made good amount of money of approximately 100 points straightforward with within 10-15 minutes. But if you wanted to be holding your position, you would have been able to hold this position until and this is again breached over here. Reason is that you are gaining theta decay when the market is going sideways, and again when market came down approximately over here, once the green candle was formed, you should have exited. So you would have gained the theta decay over here and delta movement over here. So you were doing excellent for yourself. You would have captured approximately 225 points and as well as this theta decay over here. So this was an excellent trade for a directional trader. You could have considered this line, that market is going down and it breached our pivot point and it is going up. But this was not an high probability trade because market was in the sideways and there was no proper directional move that has happened till then. So this wasn't considered to be very high probability, but you could have taken a trade over here. You could either bought call or shorted put and would have made good money up till here. So it would have been approximately 200 points, total 200 points of win over here. And the last thing you would have seen is that there is some chart pattern forming like this over here. When the things are messy, we do not take a trade. We do not take a trade when the things are messy. You could see how messy the things are over here. I wouldn't have recommended to take a trade, directional trade over. We would have not taken any trade over here. It is not a necessity that you take a directional trading using zone trading rules to make money every time when you see something. The probability of you to make good money is high when you are sure about the money that you're gonna make out of it by following the zone trading rules, and it is clear and simple. More the simple setup is, better the money you will be making. If the setup is complicated or something that doesn't make sense, don't take a trade. I recommend not to take a trade. It's okay to sit on this sideways, just look at the market, but do not take a trade if you do not find a good setup. This was an amazing day for us because potentially tells you how important it is to follow zone trading rules in every level. If you could consider, this was taken dynamically and as well as this was taken dynamically. It was so on 21st, that was the option expiry. You could see I have taken a trade over here and exited here itself. Today we took two dynamic, so we are exiting our trade and we are not making much profit today on the option expiry of 21st, but we are going to put another strategy of next week and take another trade. So we are making a profit of 10,000, that is 0.06%, and we are exiting the trade in short strat. In short strangle, we are looking at a profit of 31,250 and we are exiting the trade of short strangle. We are exiting all our trades and booking profit 36,724. These were the two dynamic pivot points that we considered. We entered over here and exited over here within not more than 1.5 hours. Still we made good money according to us. The theta decay was not high as the premium in the options were low. We took a non-directional trade over here, that was short straddle and short strangle, and exited over here, we made a decent amount of money. Important is that when you trade in zone trading, you make small losses, small profit or big profit. These are only the three possibility if you follow zone trading properly. If we would have held our position at least up till here, we would have made at least 1.5 lakhs easily. Held up till here, we would have easily cleared 3 lakh rupees of our profit. But it's okay, we made money in on that day when we were not properly sure what exactly market would be doing, as premium were extremely low, as VIX was extremely low, premium was extremely low, but we still made money without any tension. The important thing is that we didn't have to worry much. The only thing was that I took a discretionary decision that I would not be exiting my put short position over here. This will come to you once you do zone trading again and again for multiple times, and you will understand where to exit and where not to exit. And for that day, this is the perfect example of how to take a channel trading, that is zone trading. When you find no patterns, zone trading will tell you when to take a trade to make good money. For a normal trader who doesn't know zone trading, he would have drawn a line over here, and when it retested it went up. He would have held his position until it again came back here, or it went up till here. But for a zone trader, the activation of it happened once it came here and it breached over here and created a hammer pattern with a green candle. Hammer pattern with a green candle is important to take a trade. If you do not understand this thing, you will lose money in the market. It is very important for us to see that there is a hammer candle, it's a plus point. But when there is a big green candle for against it, next candle is big green candle, it's a go for you for a directional trade. And when it is breaching a pivot point, it is 100% go. It is an activation of the candle and the directional move. You would have made good money over here. You could have exited over here, that is, you could have easily made approximately 100 points here, or you could have made 160 points over here on the expiry day. You would have captured 160 point movement on the expiry day. That means if you would have been sitting on short, if you would have been sitting on spot and you would have taken a short trade, you would have definitely gained more than 50 points within 20 minutes. That was the power of zone trading. There was no pattern you could convince me that was existing over here other than this channel that has formed, and when it broke it, it took a directional trade. Most of the thing that I consider is that if the channel breaks with a proper candle or there are candle patterns forming, then only there is an activation. This is the importance of zone trading. If you like to learn more about it, come to my live trading session on my YouTube channel. I always put up shorts which explains what trade I have taken, what is the reason behind it, what is my market view, what are the important pivot points for the day, what is the direction that market is going, what are the chart patterns that are happening right now in the current market in the live session, what is the exit point where I would be booking my profit, what are the adjustment I take for the trades that I have taken. All these things are being considered at once in my shorts that I put in. Next week I'm coming up with my Telegram channel. I would be posting my details of my Telegram channel. You could come, join, and look how you feel about it. But do your own research before taking any trade. So, friends, that's it for today. Please like, share, subscribe, share with a friend who is not doing well in the market, share with a friend who is doing well in the market but is in stress. This is a very important strategy, trading strategy that will make you understand how market moves, what trades to take, which direction market moves, and what direction you should take a trade. Everything is encompassed into this trading strategy, that is zone trading by Pro Trading Zone. Thank you, friend.